Hi, Greg Hampshire, Advantage Insurance Group, a family-owned and operated independent insurance agency in central Pennsylvania. Today's video topic is Uber, DoorDash, and Lyft. Oh my. Those companies are great. They've offered a ton of opportunity for individuals to make a living in the gig economy and have really given individuals flexibility in how they make that living. It's opened a lot of doors, and there's a lot of families that are doing that part-time just to earn a little bit of extra cash, which, let's be honest, in today's environment, a little extra cash is pretty important. And while that has really changed a lot of things, it's also thrown some industries into chaos. And one of those is the insurance industry. And before we get into the video here, if you are doing Uber, DoorDash, Instacart, any of those delivery rideshare services, you need to call your insurance agent now. I'm serious. Pause the video and call them now. You need to have a conversation. So for all the rest of you, let's get into the reasons why I just told everybody to leave. 10 years ago, the insurance industry could really base a rate on how you were using a car. You were driving 10 miles into work, 5 days a week, you're driving 10,000 miles a year. They knew how you were using that car. You were typically going on the same routes into work. You knew where you were going. You were familiar with the roads, and they had the data to support the rates that they were going to charge for those activities. Or you were a salesperson and you're driving 12,000 miles a year going on sales calls. They knew the data to support the rates for the risk that represented. Well, now things are completely different. You are driving routes that you may not understand or be familiar with. Every day could be different. You're driving passengers that are not your family members. If you get into an accident and they're injured, how is that viewed? Are you going to get sued for their injuries or potentially death? Or if you're delivering groceries, you're acting like a courier, kind of like the post office, right? And that is a significant change in risk versus just going into work every day. So a lot of insurance companies, especially the conservative ones, when all of this was introduced, did not know how to deal with it. Some of them would actually cancel or non-renew your policies if they found out you were doing any of those rideshare activities. There has been some data that has come in, so even the conservative companies at this point are starting to get their hands around everything. And I'll use an example from the carrier that we mainly represent here in the office, a good conservative regional carrier that offers great pricing. They now, within the last year, have opened up a ride-sharing business class. So if I were to do Lyft on the weekends to earn some extra cash, I would contact my carrier. They would add this business use for ride-sharing onto my policy, and my rate would go up because of how I'm changing the risk and liability associated with my driving. I would get charged that, but while it may not be great to be paying extra, I'm also earning some extra money, and I know that I am well protected. I'm not going to have any gaps in coverage. We've heard horror stories. That's why we have gray hair as agents here, about people not disclosing using Uber or Lyft and their claims are denied. And that's the last situation you want to find yourself in. So make sure you're talking to your agent. If your company has that right rating class, make sure you're getting put on it so you sleep better at night. You can go and earn that extra cash and not wonder what if something happens. There's also been a few questions about these companies. From what I'm hearing from clients, they also offer their own insurance, I guess, to try to encourage folks to come on board or maybe allay any fears that there might be about not being covered. And I would also say in those cases, if you're getting copies of those insurance contracts, bring it to your insurance agent, because not all of them are created equal. Some of the insurance contracts through these companies act as primary insurance. So as soon as I turn that light on and go pick up a client or go pick up a delivery, I am now on the clock. Their insurance acts as the primary coverage for my liability, which is great. That's what you want. Some of them are not. They act as secondary coverage. So kind of a backup to your personal auto coverage. And like I said, if you don't have the appropriate rating on your policy may not pick up anything. So a lot of gaps, a lot of uncertainty. Companies are really starting to get their arms around it, but it's still kind of in its infancy. And there's a lot of questions out there. So make sure you're covered. If you're doing any of those activities, talk to your agent right away. Get that appropriate rating on. You may pay a little extra, but hopefully you're earning good money through the course of that activity. All right. Any questions, comments, please put those down below. I'd love to hear from you guys. Also, be sure to visit our website. We have a free resource for everybody there. Take advantage of that. And until next time, hope you all have a great day. We'll talk soon.